Hello and welcome to DC Capital. This is episode 14 for the Index Futures series. And in today's episode, we will deal specifically with the Seek and Destroy Market Maker Manipulation template. And as always, I will do a market review and a market outlook. Let's jump right into the market review. Quick market review on the daily chart for the E-mini NASDAQ100. What a crazy week. This volatility is insane. It's absolutely amazing. And we can see that here. This candle is the CPI high impact news event. On Friday, we have traded into the buy side imbalance, rejected that level and traded lower for the close of the week. Weekly profile for the NASDAQ futures contract. Seek and Destroy Bullish Thursday. We can see that on Monday there was a small range day, Tuesday as well. On Wednesday there was the PPI news release and the FOMC meetings, but price stayed in a tight consolidation and was not willing to move lower or higher into liquidity. That is a telltale sign for us that we can expect high volatility because a small range day or a couple of small range days are leading into large range days. And this is what we can see here. Big drop, CPI high impact news event, big drop lower into daily discount PD array, and from there trading higher, seeking buy side liquidity into the daily sell side imbalance. Price is creating the high of the week on Friday with the high impact news event retail sales, and from there it is trading lower and closing the week. This pattern is the market maker manipulation template Seek and Destroy Bullish Thursday. We can see that here. Price is building liquidity in form of sell stops or sell side liquidity. We can see that here below this short-term low there's sell side liquidity or sell stops. Price is trading lower, raiding those sell stops. We can see that here. And generally this is on the heels of a high impact news event. In this case it's CPI. We have intra-week buy stops above this short-term high, and this is seen on this high and on this high. And also we have a higher time frame daily or weekly premium PD array, and in this case this is the daily sell side imbalance. Once price traded into that daily premium PD array, we can expect a potential reversal in the market. This is Monday's trading, start of the week for the NASDAQ100 futures contract. We have rated most recently the buy side liquidity pool. We are operating in the New York Index morning session, 8:30 to 12 p.m. New York local time. Notice that this is the extended New York morning session, and after price rated the buy side liquidity pool, we can see displacement lower, a break of market structure here, and a fair value gap to short from. The first profits are taken below this short-term low, and after price is breaking market structure again, we can look for a possible scale in inside this sell side imbalance or fair value gap, and taking profit below this short-term low in the external range liquidity. This is Tuesday's trading for the NASDAQ 3-minute chart. And what we can see here, again, we have a high probability short setup. This setup has been created during the afternoon session, New York local time, and we can see here that price has most recently rated the buy side liquidity here and also those relative equal highs. Price is trading lower, and there's this bearish market structure shift in price, which is indicating that the order flow is now bearish. We are entering on this sell side imbalance, and we can permit this entry and establish another position in here, taking price lower into a discount market. This line here is the equilibrium price point, which determines a premium market and a discount market. We are determining the equilibrium price point from this low to this high. So this is the trading range we are working within, and this is the midpoint of this trading range. We are short, so therefore we want to cover our position below equilibrium in a discount array. First partials are taken below that short-term low in a discount array. The second partials are taken below that short-term low as well in a discount array. And the final take profit is taken below that short-term low on the 3-minute chart. Notice as well that the first partial and the second partial are inside the range. It's internal range liquidity, and the full take profit is outside that current trading range, so therefore this is the external range liquidity. This is Wednesday 5-minute chart. We have the PPI numbers and the FOMC minutes. Notice how price is held in a tight consolidation, building up open float above and below current market price. I was only interested in the market if one of those extremes are being rated, and I would look for a trade in the opposite direction. But we can see here that price is doing literally nothing and creating open float above and below current market price. So therefore, on the next day with the CPI news release, I'm expecting a lot of volatility and a large range day. This is Thursday's trading 15-minute chart for the NASDAQ100 futures contract, December contract. This is crazy volatility. It's absolutely ridiculous. We can see here that price is dropping aggressively lower, trading into a daily discount PD array, and also price has created a liquidity void. There has no trading being made. So the market has a really high probability to trade back into this liquidity void. And now on the next slide we are focusing on this yellow box, because in here we can hunt high probability long setups. 1-minute chart post CPI. There's again the liquidity void. No trading has been made here, so the market has a high probability to trade back into this level to reprice it. We can see here that the market rated another time the sell side liquidity, traded higher, bullish market structure shift, and is respecting a bullish order flow. and is seeking buy side liquidity and this liquidity void. Let's jump on the next slide and we will have a really close look on the setup and the details. This is where the magic happens. 1 minute chart again for the CPI high impact news release on Thursday. Price dropped heavily lower. We are targeting the liquidity void above market price and we are looking for a higher probability buy scenario with a bullish order flow. And we can see that here. Price rated the sell side liquidity pool, traded higher from there. Bullish market structure shift, down closed candles should be respected. This bullish order block is getting respected and price is also respecting this buy side imbalance or fair value gap. Low resistance liquidity run into the liquidity void shown on the previous slide. Let's jump right into Friday's trading, the last day of the week. And we have another high impact news event, 8:30, retail sales. We can see this move higher into the daily sell side imbalance. This is also a higher time frame premium PD array. And at the same time, reiterating buy side liquidity. This is the Tudor swing to engineer liquidity. And we're looking for opposing direction back into this 5-minute buy side imbalance. We want to see a bearish order flow and price to seek sell side liquidity. This, in fact, is what we can see here because we have a bearish market structure shift and price is trading back into this sell side imbalance or SIBI, sell side imbalance, buy side inefficiency, and from there it is trading lower, seeking for that buy side imbalance, busy, buy side imbalance, sell side inefficiency as a target, and the possible scale in is what we can see here. Target this 5-minute busy. This trade has been made during the New York Index morning session from 9:30 in the morning to 11:30. With that being said, I will finish this weekly review about last week's trading and we will jump right into the market outlook for the next week. Welcome to the market outlook for the upcoming trading week. In the previous week, we saw that price traded lower into a higher time frame discount PD array to finally seek this sell side imbalance. This is what we can see here. Price rejected it and traded lower for the close on Friday. I'm expecting a risk off environment to continue and I'm looking for lower prices in the index futures. So my next target is going to be the sell side liquidity below market price, and intraday I'm looking for any moves higher as a potential short opportunity and to pair up orders. I'm not expecting strong retracements higher because the US dollar is really strong and therefore the index futures are trading lower. Market outlook for the US dollar. This is the weekly chart and we can see that on this week we have traded lower into this weekly busy buy side imbalance, sell side inefficiency, and price rejected that level really aggressively, and from there I'm expecting continuation to the upside to seek buy side liquidity. I'm expecting a risk off environment to be continued. So therefore I'm looking for higher prices in the US dollar and lower prices in the index futures. On the daily chart we can see that we have a buy side imbalance below current market price, and this could be a potential draw on liquidity for the US dollar. Keep that level in mind. With that being said, I will finish this video here. I wish you a really successful upcoming trading week, and don't forget to be patient because market volatility is absolutely insane. Wait for your confirmations, stick to your trading plan and enjoy trading. Thank you very much for watching this video. Don't forget to give it a thumbs up, comment and subscribe to the channel, as it will help the community to grow even faster. Be safe. It's DC Capital.